Hello everyone, welcome to our new webinar. So just please let me know if you can hear my voice. I noticed that there was some chat error on TradingView. I'm not sure if this one is working well. I haven't seen the updated chats when I wrote something. So please just let me know if everything works fine, if you can see my screen, hear my voice. Okay, perfect. So we will start in a second. Okay, so welcome to another webinar here on TradingView or YouTube. So if you like this webinar, please leave us a commentary, leave us a like, ask any questions, and maybe you also should subscribe to our YouTube channel or, of course, on TradingView here to follow us. So, as you know, US dollar has seen a pretty interesting move last week. So the US dollar has recovered, and recovery, as you know, came firstly after the strong US jobs data reported for January, then also worse than expected US CPI figures last week. Also, retail sales and some economic indicators are still quite strong, so it will not be easy to fight inflation. So that's why the US dollar is trading to the upside with the US yields, because there are speculators who think that Fed should stay hawkish and be even more aggressive, maybe with even 50 basis points increase on the next meetings. So of course the data this week again will be very important. I think that we have the PMI tomorrow, not only for the US but also for the UK and Europe, and also new home sales for US on Friday. FOMC meeting is on Wednesday, so this will be quite important as well, because if there will be a change in tone from Powell, as you know, if he will stick with the previous commentaries, this will be somehow dovish. But if after the latest data and the US CPI numbers, he will somehow say that more hikes are needed and he will be talking in this direction of a hawkish view, then obviously this means that US dollar could continue much higher. From an Elliottwave perspective, we are not surprised that the US dollar is actually recovering, because, as you know, we've been tracking this bearish impulse for a while. We were looking for potential support around 100 area, and so far we had a very nice bounce. Also, the price came to the first line of this downward base channel, so it can be first potential resistance. But I think that this, since we are in a higher degree correction, I think that this recovery can be a little bit more complex and even longer compared to the previous pullbacks, because those pullbacks within this downtrend were of a smaller degree. So if I'm tracking the higher degree, of course, I want to see something more complex here. So with that in mind, I'm aware of potential more choppy price action here, maybe till we get some clarity from the Powell Wednesday. So till Wednesday we have time for this correction to unfold. But actually what I'm looking at here is a correction in wave B. So on Friday, Euro found some support, Aussie found some support, and we have seen a reversal to the down on dollar index here, which is not a surprise, because there is a holiday in the US, and this kind of a price activity is called holiday reversals. So ahead of the holidays, especially if there will be a holiday on Friday or on Monday, when you will have an extended weekend in the US, there will be adjustments of the positions and portfolios, and that's why you can see ahead of the weekends, you can see this kind of a reversals. So this is not a surprise. And after I was reviewing the charts this morning, I came out with an idea that maybe this pause here could be still way be as part of a higher degree ongoing correction. Okay, so don't get me wrong, I am short term maybe expecting more sideways and then even higher prices on dollar here, but overall I am bearish, and I think that dollar index could continue much lower after a rise towards 105.50, 106 level, which is the first resistance here at this wave 4. The upper resistance is at 108. So no matter how high we go, I will try to look this as a corrective counter trend, a temporary movement. But I think that in the short term, as I said, we could see more upside after this wave B is finished. Now, this is still a dollar index, but here I have this dollar equal weighted. Okay, as you know, we covered this dollar map last week, and since market reversed lower, I think that this could be even some kind of a triangle or maybe even flat for a wave B. So still think that this is the middle pose within this ongoing correction. Okay, and why I'm looking for this type of a price action when I'm tracking flat for a wave B? Well, because if you look at the euro dollar, you can actually see that where I have it, okay, that here we have seen a very nice drop to a new low, okay, close to 106 level, but this drop was made only by 3 waves, okay, and was pretty fast reversed after we reach this, we break this 106.50. So I think that this is a 3 wave decline, which actually suggests, let me just label here, okay, which actually suggests that we are here in the middle of a complex correction. So the first higher degree wave A maybe could have been finished here on Monday, and then market is now moving into this sideways price action. So I still think that there can be more weakness on the euro, but if we break 107.20, there's a very nice resistance again going to be seen around 108, which was the high actually after the CPI data last Tuesday. So I still think that euro could continue lower and that this is not the end of a wave C, because if, let me show you, let me delete this for a second, because if someone thinks that maybe this is the end of a wave C, well, wave C will very rarely be so small, okay? So I just think that maybe we are rather in a sideways price action here, and that we'll see more weakness later on. Usually markets will not be just very simple, will not have just very simple classic structures. That's why I'm especially considering this one after this push out of this downward channel. And also through today's sessions, we will most likely see still slow price action because the US, as you know, is away. Also, if we look here on this chart, basic technical chart, we have seen a very nice bearish reversal weekly candle here, close to this, that's 100 and 200 moving averages. Okay, but more importantly, what's probably this major trend line that was broken here last year, but now it's been retested. Okay, so it looks like that we are in a sideways consolidation pose, and ideally there will be support at this 50. Also keep an eye on the RSI. Now normally when you know that you are in uptrend, well, when the RSI is trading above 50, we have managed to cross this 50 level at the end of 2022, but now when you are in a pullback, you would expect that this RSI would stop somewhere around 50. Okay, so I think that now this represents a very nice close, and that we will see a next swing to the upside, which will be the same formation from the price here. So overall, still we are in a correction here. I think that euro eventually will continue higher, but before that we have to see this completed correction. Maybe this will last till the next CPI figures, who knows, because now markets are a little bit confused after this data. Before that there was a very easy clear trend of dollar weakness because inflation was coming lower, but now if this will again change, then this obviously will also change the trends here. So it could be a little bit tricky here in going into the next few weeks. Now let's take a look also on cable. Okay, so cable here really didn't change much. The inflation came slightly lower, so that's why we have recently seen
this weakness on pound. Also, Bank of England is known as very dovish. Now the economy is definitely not in a good shape. So again, will be important what the next PMI data will be in the UK. But looking here, I think that this can be a corrective wave for still just consolidation within uptrend. Even if we see some unexpected dip, let's say below 1.16, I would still be looking for this as a counter trend movement within new recovery. Okay, so I think that there can be opportunities here on the way up, especially if maybe wave 4 will give us more clear price action of a completed correction. Maybe triangle is very possible here. If we are going to stay here above 118.30, then I think that this could easily be a wave C with the overlapping price drop here. And then you will see more sideways price action for waves D and E. So it will be very challenging for this formation to form as a triangle, especially if dollar index would really continue to much higher prices. Then you know that maybe at some point even pound could spike below that level. But even if this happens, I would still be looking for this to be correction, maybe a complex one, like possibly like a flat in this wave 4. So in either case, I'm looking to be as a part of an ongoing uptrend, and at some point I believe that we will see 12450 broken rather than these lows here from September. Now let's take a look also on Aussie dollar. Now Aussie dollar also came slightly to the downside. Last week, but notice that there was only temporary weakness here below this 68.75. I firstly thought that wave B has finished here and that you are now going to see wave C weakness towards these support levels here, where you also had this former wave 4. But again, because of these holiday reversals, price action, because of these Friday flows, I think that we are actually still in a complex wave B. So the ideal resistance, in my opinion, could be around here, okay, or maybe even earlier if there would be some kind of a triangle for a wave B rather than a flat correction. So 70, 30 around there, that's the key resistance for the next sell-off. Okay, but again, these are the intraday flows. Higher degree trends is pretty clear. Okay, keep in mind that from October lows we clearly have 5 waves up. So these reversals to the downside that we are seeing, that we are tracking at the moment, came after this wedge pattern here, ending diagonal in a wave 5. So the ideal support is definitely here. The long-term support could be a very nice opportunity on the long side for 2023. So here 660.30, 67, that's the area where I would be looking for next potential bounce. Also looking at some big picture here, maybe this one. Okay, notice that here could be an interesting head and shoulders pattern. You had left shoulder, head, and the right shoulder, somehow very similar shoulders based in time. So I think it's a pretty nice, interesting reversal here that occurred also from the 61.8%. Also, there was this major trend line that was broken recently and turned into support as well. So I think it's a pretty clear price action, and I think that there can be much more upside here coming in this pair, but maybe we will have to wait a few more weeks for this correction to complete itself. Also, let's take a look at just a second. Let's take a look on dollar yen. Okay, so dollar yen, as you know, Ueda was nominated for the next Bank of Japan governor. He is somehow he said that current policy sittings are appropriate, are fine. Okay, so that's why we have seen this dollar yen moving to the upside. However, the next important key data for potential change in policy from Bank of Japan, of course, would be the inflation. And the next CPI report will be on February 24th. So it should be this week when we may get a lot of clarity if maybe the inflation here is really going to stop or no. So far you can see here inflation in Japan is coming to the upside, in the US is coming slightly lower. So if this will keep moving higher, then you know that maybe yield curve control somehow will have to be adjusted again, and this would be seen as hawkish, and because with higher rates they will have to fight inflation, and that's when dollar yen could continue back to the downside. Looking at the technicals here, very nice bounce from this, not resistance, but that's support. Okay, so that was a very nice bounce from these supports, and looks like that we could be now in a higher degree correction, wave B or wave 2. First resistance is definitely here around 135. Next higher resistance is around 139. I know it's very difficult to trade this one, especially if you're looking for some intraday setups, because the risk obviously is here, can be very big. As you know, invalidation level is at 152. So if you're more short-term trader, the important is that you can recognize potential completion of this corrective rise. Okay, so far, if you look here on, I will look at the intraday chart. Okay, you can see that this move up was somehow overlapping. Okay, and I'm looking this to be as a WXY correction. Here I have, here maybe it's better look. You can see an overlaps here. So I'm looking for WXY correction now with the first resistance here around 135. However, to make sure that this correction is completed, what you have to see? Well, you have to see on a smaller degree time frame, you need to see 5 waves down. So until you see these 5 waves down, we cannot say that correction is finished. And this reversal, potential 5 waves drop, will give you exact invalidation level. It means you will exactly know where to put the stop loss. So that's why I'm always trying to repeat and wait on a confirming price action. Of course, sometimes I break this rule, but the important is that even if you break it, that you go for it with a much smaller position size. So here I also prepared this count. It's an hourly wave count, okay? And as I said, it could be a WXY here from the lows, okay? Let me just, okay. So now that's my primary count. So this could be 3 waves up for this final part of this correction. But I also realized that maybe this could be ongoing bullish impulse. So what is very important? Well, very important is that this bullish impulse is invalidated, because if that would be the case, then of course we would have enough confirmation to say that maybe top is forming and that higher degree correction is coming to an end. So we need, as I wrote here, we need an overlap with this wave A or wave 1, because then I would not be able to say that this is wave 4, because overlap cannot trade into territory of wave 1. So if suddenly we see prices coming to the downside here, something like that with 5 waves, then I think that there will be very nice price action that would confirm the top is in place, and in such case I would be looking for potential shorts on a pullback. Okay, so for now it's a little bit too early, because I clearly realize that there can be another jump higher here and we could potentially retest higher resistance. So I'm just waiting. Whenever this drop will come down in 5 waves, I will watch and observe potential pullbacks for shorts. Okay, hope this makes sense. Now let's take a look also very quickly on dollar CAD. The reason why I bring on dollar CAD is because Bank of Canada was one of the first banks who said actually that they will stop with the hikes. But you have the next inflation, I think it's on Wednesday or tomorrow. So as you know, the global inflation is a main theme right now. And if there will be, again, another country where inflation will jump, maybe in Canada, then of course they will have, maybe they will decide again for another rate hike in future. And this would be seen obviously as hawkish from speculators. So watch out this dollar CAD very closely. Now here I have this wave count, which potentially could then cause much more weakness, especially if we break this support level here from January, from early February. So you have to see a daily close below that level. If that would be the case, I think that we could continue to the downside into the extended wave 3. But as long as we are trapped below this bearish level and bullish level, I also realize, okay, that maybe this is some kind of a triangle. So it's going to be an important for me to see the inflation figures to make sure in which wave count has the better possibility, or maybe I should say probability. Okay. However, we should not ignore the crude oil. Okay. So that's why I'm bringing on this alternate count as well as a potential correlation to crude oil. What the crude oil is doing at the moment is also seen in a triangle. Okay, the bearish one. So looking here at this crude oil, if we're really starting to see a break to the downside from this triangle into wave 5, then you know the dollar will get even stronger and CAD would see more weakness. And if inflation would stay low, okay, then this would make sense. But if inflation will be strong, then this will be positive for Luni, and this potential plan would be off the table, of course. Now, looking at the crude oil here, keep in mind that firstly, Russia said that they will just a second. They will cut the production by 400 or 500,000 barrels. But then the US last week on Monday announced they are ready to sell 26 millions barrel of crude oil from their reserves. Okay, so it looks like that they believe that maybe prices will be somehow going to see more weakness, and then obviously they would be ready to fill their reserves at lower, better price. So we'll see if this could be the case. Definitely, market has seen some very nice recovery and sideways price action since November, when the White House has released this fact sheet and said that they are ready to buy oil between $67 and $72. So since then, we have seen some recovery. So maybe now, if again we respect what they are planning to do, maybe we'll see finally a break to the downside. Now, there is a very nice, definitely attractive support here around 62, 60 or $60 per barrel. These were somehow pivot level for 2021. So I believe that we could retest this level and maybe complete wave A here of wave 5 of wave A down at this area. Also, again, looking, and since I mentioned the triangle here, it's an ABCD pattern. This is already the April contract, because today the March contract is going to expire. So you may see some volatile price action, but the key level for this current short-term swings for this week will definitely be around $83. So as long as we are below that level, I think that we should be aware of potential more weakness. But of course, in confirmation level for more weakness that we are already progressing lower into wave 5 would be a broken 72.57 level. So until then, this price action could remain a little bit more choppy here. Now, let's take a look also on New Zealand dollar. Here it is. Okay, so on Wednesday we have Bank of New Zealand decision on their rates. They are planning to lift rates by 50 basis points. Jobs are very strong, wages are rising. So of course, if they want to stop the inflation, they will have to stick with aggressive policy here. But looking at this wave count, I think it's a very nice price action actually. So you have here an impulsive rise from that October 2022 lows. Now this was very nice and clean, straightforward move, definitely impulsive. And after impulses, you will see typically slowdown. And so far, you can track potential flat correction here, since market just bounced temporarily to a new high before it came back to the downside. And this drop looks very strong, definitely much stronger compared to the previous rise. Okay, so I think that this could be a wave C of potential flat correction. Maybe another print of the lows here will be seen to this previous fourth wave swing support. But overall, I think it's a pretty nice pattern which could send prices much higher here on Kiwi. Of course, commodity currencies have a very strong correlation with the stock market, as you know. So it's very important as well that you keep an eye on stocks. Here I have Dow Jones Industrial Average versus Kiwi, and you can see that they are positively correlated and that both are now in a correction. However, I am aware that maybe this stock market will see eventually deeper pullbacks, especially if the dollar will continue higher, because it's not easy for stocks to rally if you have speculators and maybe Powell on Wednesday, who will turn out to be more hawkish. Okay, so here looking at the S&P 500, I still think that we could be here seeing potential more complex wave B, maybe even wave 2, who knows. But the idea is that ideal support would be around 3800. Okay, you also have weeks somehow still testing the lower range of these 2022 levels. So it looks like that there is not a lot of fear at the moment, but obviously you know that this markets moves in cycles, so this could actually change very quickly. I would possibly look for potential longs, maybe even some mid-term to longer term, when we have weeks obviously at the extreme, when the fear will be at the extreme levels. Okay, not when we are at that stage. Also, since I mentioned DJA, if you take a look here on this Dow Jones, you can clearly see a very nice potential 5 waves up and now ongoing correction still. So ideal support would be around this level here. You have the 50 and the 61.8%. So if we see this level, I think that this would be a very interesting opportunity for potential longs here. And other markets, of course, like Aussie, Kiwi could follow to the upside, especially Aussie. Now let's take a look also on DAX to give you just a quick update here on the latest price action, because last week the market actually didn't move much. Okay, so I came out with the idea that this is actually still ongoing correction, because if the market is not making any aggressive move in either direction, then I think that maybe we should rather stick with the current trend. And if you look closely here, I think that was a wave 1, wave 2, wave 3, wave 4. First, I thought that wave 4 has finished here and wave 5 here, but since this is now just keep moving sideways, I just aware of potential more upside here, especially if the euro would also see a recovery back towards 108, as I said earlier. Then this would allow maybe DAX, which is very strong after all, to reach a new high here from this triangle. But not today, maybe in the next few days when the US is back, because I think that volatility will stay low here. Okay, now let's take a look also quickly on CAD yen. I'm not sure if I covered CAD yen last week, but definitely we are covering it quite a lot. And the reason why I'm bringing on CAD yen is because we have a pretty clear wave structure here. Okay, so what happened last year is you had a very nice impulsive recovery, but then market reversed aggressively to the downside. So far with 3 waves, but notice this third wave is extended. That also caused a sharp sell-off when this lower trend line of this base channel was broken. And normally when that's the case, you can expect that market will unfold 5 waves up, 5 waves movement, because normally in impulsive fashion, wave 3 will be the longest and the strongest wave. So I'm watching now potential wave 4 pullback. You have the very nice 38.2% resistance not far away. There is also 100 level, psychological level as well, and above that you have this previous swing support that was broken here back in December, could be maybe retested as a potential resistance, and then you see more weakness. Also wave 4 is equals to wave 2 in that area as well. So I think it can be pretty good and interesting week for this pair. Now technicals definitely are in favor of the bears, in my opinion. Also, let's take a look on on gold. Okay, so what's happening on gold? Big picture, nothing has really changed. Still, we are tracking ongoing recovery. I think that last year we have seen this wave 4 that found potential supports in October, potential end of this correction at this upper trend line of this base channel. So I think that this year we could continue higher. Now recently we have seen a very nice and sharp reversal after the positive start going into the new year, but now I think that we are in a corrective phase. Now this pullback so far could be very similar to this one that we have seen in back in through October of 2022. So very nice support potentially. Here is also this previous swing high. So it was broken here. Notice that there was a lot of let me just do this. There was also a lot of noise here around this level, so definitely can be a very attractive level, but then I realized that this was very sharp and strong draw. But if you look closely here, well, you can still potentially count 3 waves to the downside. Okay, we came into this very nice support here around very close to 1800 level. So I'm just wondering if we can see a little bit of more upside. If impulsive or if current rise will continue and even break this 1870, then I think buying pullbacks could be quite interesting on the short-term basis. So I would be looking for something like this. Okay, so if we can break impulsively coming to the upside very strongly above 1870, then I think buying pullbacks could make sense while the market is trading above that low, because then this could be end of a wave 4. Of course, this rise on a smaller time frame, like an hourly chart, should be visible in 5 waves, not in 3 waves. If you will see just some kind of a choppy price action and slow moves here, then obviously that would not be seen as an impulse in my eyes. Okay, hope that makes sense. But overall, I think that that this chart is very nice, very clear. There were a lot of buyers at the start of the year, and because there was a very strong and aggressive move in the first few weeks after a new year, of course, those traders who were long were either looking to go out in profits, or they pulled their stops higher. And now these traders with especially weak hands will try to be off the market here, and you know what usually happens when the market pulls you back. So I think that there can be more upside, of course, when we will see this nice first bounce in 5 waves. I will definitely keep a very close eye on that one. Okay, finally, let's take a look at some cryptocurrencies. Firstly, Bitcoin. We covered. Did we cover this one last week? We definitely did on the Ethereum. So firstly, Bitcoin. Well, we have seen a pretty nice but interesting bounce. I was bullish on cryptos, but I didn't expect such a strong move to the upside if we consider where the US dollar has been headed. Of course, if US dollar will keep rising in this corrective rally, of course, cryptos stocks cannot ignore this one, and obviously cryptos could stop at the resistance. And if you look closely here at this wave structure, you have 5 waves up. Okay, so that's wave 1, wave 2, wave 3. We have been tracking wave 4 into this support, very nice and perfect bounce. So firstly was resistance here, it was broken, then retested, and we have seen a move to the upside, and now you have new resistance up here around 25,000. So I think it's a pretty strong potential resistance area, and since we have 5 waves up, we definitely should be aware of this correction here. Okay, so the next dip could be is maybe not that far away. Also, I have another wave count here, which is a little bit different, and it's actually bearish, and shows that these 5 waves up belongs to wave C of this flat correction, because this drop here to a new low within wave B can even be counted in 3 waves. So I have 2 wave counts, bullish and bearish, but both suggest that this is very important resistance. So either we see drop or reversal to the downside in 3 waves or in 5 waves. I'm not sure. I just know that we are at a very key level, and that be aware of potential pullbacks here. Okay, because we know that after 5 waves up, trend sooner or later will slow down. Of course, sometimes this 5th wave can be extended. We don't know that, but what we know is that it's a little bit late to be long within this trend. Okay, now let's take a look also on the Ethereum. Now Ethereum also has a very nice move to the upside. Now here, this chart, in my opinion, is very important. We talked about this one last week when the price was actually trading here around 1500. So what's it's all about? Well, notice that this is the futures, are the futures, and sometimes, of course, futures you will see gaps, and in those gaps there are unfilled orders, and that's why price will firstly tend to retrace back to fill this gap, and then when new orders are executed in this area, the flows will again change and higher degree trend will resume. So firstly, like a magnet, then causes a bounce. That's the gap, how usually will try to impact the price. That's one thing. That's why we were looking for this support. The second thing was that wave 4 is sometimes similar to wave 1, which again came very close to that area. Then you have this base channel, okay, that I also discussed in some of the markets earlier. So here you have seen a breakout. Usually this breakout causes an extension of wave 3. It confirms that you are in a wave 3. And then what normally you would expect is a pullback into wave 4 that will try to find the support at the same broken trend line. Okay, so again, this came out very nice at that gap area. Okay, and also you had the previous fourth wave here, also very important support for the current wave 4, because whenever you see pullbacks of fourth waves, those can find the support in the same area. And last thing, you have this here, when after the gap there was a small pullback, okay, here into this 1500 area. So it was not completely filled gap, but what happened here is a very strong volume, as you can see here at the bottom of this chart. So this spike in volume, it means that there were plenty of important orders who sent the prices higher. But what I want to see is whenever the price retraces back into this or below that levels, that's normally the new support. Okay, because probably a lot of orders here were executed, stop losses were placed below that, and market clears them out and then turns back to the upside. And also you had the 38.2%. So everything what is important whenever it comes to the Elliottwave rules and especially guidelines, it's on this chart. So if you love the Elliottwave theory, you can print this chart, save it, whatever. Just keep in mind that all characteristics of the beautiful impulses are and of these corrections are on this chart, okay, including volume. Okay, what do we have? Gregor, I will lift sooner. Okay, thank you, Bit. Okay, so finally, let's take a look on Ripple. I think we have it here. Actually, we published this idea on the Ripple here. Okay, so Ripple also had a very nice bounce here in 5 waves. Then it came down to this fib support in 3 waves, and now what we can see a very nice reversal higher. So I think that if we can break this upper trend line resistance this week, there could be a very quick push to a new high here, while the market is holding this 36 cents. So I think that this is a pretty nice and straightforward price action, which suggests that Ripple could strengthen. Also, if we look at MOONBEAM, now this is very interesting altcoin. We also published this one, and I highlighted here back, that was on February 15th, I highlighted potential flat formation. So it's a bullish price action, 5 waves up, 3 waves down for wave A, 3 waves up for wave B to a new high. So the support was highlighted here around 42 cents. And later on, you can see that price very nicely came back to this level, cleared out probably some stops below that level, and now it turned very nicely to the upside. So now, as long as you are trading above 40 cents here, I think that this altcoin has more upside potential here. So we will try to post these updates here in the commentaries below that ideas, okay, in the next few days. Okay, traders, that's it from it for today. So if you are from the US, I think that you will most likely be away from the charts. I have some paperwork to do, so make sure to trade safe, trade small, don't be too aggressive. Okay, traders, once again, if you like this webinar, please subscribe, leave a commentary, leave us a like, and hope to see you next Monday.
Have a good day. Bye.